Hi, welcome back to One Finance, and in this video we're going to cover cryptocurrency. So what is cryptocurrency? It's a peer-to-peer digital payment facility. It is maintained using a public ledger on a network, what we call blockchain. It uses cryptography to verify transactions. So let's have here a typical bank transfer versus a cryptocurrency transfer. Now in a regular bank transfer, if we have here Juanito wants to transfer funds to Anita, Juanito would need to inform his bank, and then the bank would record the transaction in a private ledger. And before facilitating, Juanito would need to pay extra fees or convenience fee to his bank before the bank transferred the funds from Juanito's account to Anita's account, for example. And then in a cryptocurrency peer-to-peer transfer, Juanito would need to initiate the transfer via his electronic wallet and then encode the wallet address of Anita. And then that specific transaction is being recorded in a public network. Okay, so a ledger encoded in a public network but is secured by cryptography. So only Anita and Juanito knows that this specific code of transaction pertains to their transfer. And the transfer is almost instant with lesser fees. So let's try to zoom into the blockchain now. If there's a specific transaction, so we know that this one is actually the transfer of cash by Juanito to Anita. But in order for that to be included in the network, it has to be validated and secured. Now, in this case, we have miners. So miners are actually verifiers who try to verify, confirm, and secure this transaction to be included in the blockchain. So this block is actually a bunch of transactions and these blocks and these blocks. So they are being chained. Uh, thus the word blockchain network. Okay, so in order for the miners to secure this transaction, they have to solve a very complex math or mathematical problem, or what we call algorithm. And because of that work, they are rewarded a fraction of a coin. Okay, so miners are responsible for maintaining the security of the network. And in order for the network to be hacked, they have a certain, let's say, group of hackers should have at least 51% of the computing power of the network. So 51% hash rate. So that would be very difficult to hack because of that requirement, computing power requirement. So let's go back to the comparison of bank and cryptocurrency peer-to-peer transfer by looking at some parameters here. Now, in a bank that's private and secured because the ledger is actually maintained by the transferring and receiving bank, uh, turnaround time is a bit long because if that's going to be, let's say, interbank or domestic bank transfer, maybe a day or two is required. But if that's going to be from a domestic bank to a foreign bank, maybe at least a couple of weeks, maybe 2 or 3 weeks. That's going to be your turnaround time. And expensive fees because first you have to maintain a certain fraction of the fund to your account to maintain it, and in order for it to be active. And other than that, of course, the transfer fee or the convenience fee in doing the transfer. So for domestic banks, I think that's a bit cheaper compared to transferring funds from a domestic bank to a foreign bank abroad. Now, in cryptocurrency, although it's recorded in a public ledger, but it's encrypted. So remember that in order for a hacker to hack the network, it has to come up with 51% computing power or hash rate of the total network. So that's going to be very, very difficult. And then almost real time. So depending on the confirmations required by the blockchain network, um, a regular transfer can be completed in less than an hour or maybe up to 24 hours. So lesser fees because you don't have to maintain anything in your wallet, unlike a typical bank account. So you would only pay for a fraction of coin or the fraction of coin in doing the transfer from your wallet to the recipient's um, wallet. So how to get cryptocurrencies, like for example, Bitcoin. Now there are two ways. Number one is mining. So remember, when you mine, you try to secure the block. So in doing that, you are given a fraction of that coin. So you have to use an ASIC, or let's say application specific integrated circuit, or maybe GPU mining or CPU mining that would also do. But in doing that, you are given a fraction of that coin. Now you can also do buying. Use your fiat through a broker and buy some Bitcoin or buy some other cryptocurrencies. So use your peso, use your dollar, go to your broker, and then exchange it with Bitcoin, for example. So these are the two ways that you can get cryptocurrency. What are the most common cryptocurrencies? Now here we have the top 10 according to the market cap. So the market cap is the total supply of that specific coin multiplied by its prevailing market price. So here, if you're going to look at Bitcoin, is actually at $1 trillion. So that's very, very huge market cap versus the second which is actually Ethereum. That's about half of the market cap of Bitcoin. So these are the top um, coins in the market. We have thousands and thousands of coins, but these are the most commonly traded, used, popular coins as of December 3. So we have Bitcoin, Ethereum, Binance, we have Tether, Solana, Cardano, and so on and so forth. So these are their volume, 24 hours, and then their change of prices, 24 hours. So are cryptocurrencies risky? Now, in order to answer this, we have to go back to the risk-reward trade-off. So if you have here your risk-reward or risk-return trade-off, and then you plot all the assets that we have discussed in previous videos, we have money market, we have bonds, we have equities, and cryptocurrencies would actually be the top portion, which is pertaining to others. So you have there your time deposit, treasury bills, up to corporate bonds, REIT, common stock, and there you have it, Bitcoin and altcoins. Now, to give you an idea about the risks, these are the most performing pairs of cryptocurrencies as of December 3. So that's only one day. But if you're going to look at here, Matic, for example, or ticker MATIC, performed almost 20% in one trading day. While this one, uh, Coin Gala and REQ, ticker REQ, performed like almost negative 15% in one single day. So can you imagine a coin can easily fluctuate from 5, 10, 15, or even 20% in just one trading day. So you really have to have a very strong stomach to tolerate these fluctuations. So again, returns comes with risk. So if you want higher return, then you want to embrace higher risks also. So how crypto assets are valued? So there are actually two ways. Number one is the supply and demand function, and the second is the utility function of the coin. So for example, here we have supply and demand of Bitcoin. Now, there are only 21 million Bitcoins in the market. So that's the most supply that the market would have, 21 million. And as of November 24, 18,500,000 of that is already mined. Remember, mining, it's already mined. So there are only 7.6 million available coins in the market. So remember the law of supply and demand in economics, that if you have huge demand for that certain item or commodity and you have limited supply, that would push the prices to go up. Now, same case here in Bitcoin, because we only have 21 um, million coins. And since the coin is very popular, there's a lot of demand for this coin coming from both retail and institutional investors. So that would push the price of the coin higher. So if you're going to look at here, we have 1 day fluctuation of that, that's around negative 1.49. But if you're going to look at here, let's say 1 year, okay, the year-to-date performance of this fund here, in January, the price of one coin is below, like, let's say $15,000. But now, if you're going to look at, that's $56,000. That's around 3, 4, 5 folds of the value of the coin a year ago. So that's how um, risky the asset is. But if you're going to look at the risk reward portion, you could have almost like more than double your money in just a year. Okay, but you have to look at, again, watch out for these big drops here, fluctuation, particularly in May and July. If you're going to look at here, coming from 60,000, it dropped to almost 50%, 30,000. So second is utility functions. If you have upgrades for, let's say, decentralization, handling smart contracts, scaling, it would attract developers and users of the platform, thereby enhancing its utility, its purpose. So is that network capable of handling, let's say, decentralized finance or decentralized apps? You have, let's say, NFTs or decentralized autonomous organizations, DAO. So those are the things that they have to consider in valuing the utility function of a network. So for Cardano, we have here the coin. The native coin of Cardano is actually ADA, or ticker ADA, which is valued at 1.6 dollars per coin as of December 3. So here we have some crypto news and regulations. Now here in this particular article, in September 7 this year, 2021, El Salvador officially declared Bitcoin as its currency. So it's actually a legal tender there. So you can buy exactly a candy or milk or chocolate from a store vendor, and they would accept that because it's actually their legal tender. Now here in China, they banned crypto mining. So remember, the crypto mining activity is actually uh, the main purpose of that is to secure the blockchain, but at the same time, crypto mining involves a lot of energy consumption. So here in this article, China actually banned crypto mining. In this article, we have here discussion about taxing or imposing taxes to cryptocurrency transactions. And then we also have here banks like Goldman Sachs and other Wall Street banks are exploring Bitcoin backed loans. So another article here, Fidelity set to launch physical spot Bitcoin ETF or an exchange traded fund. And here we have a hacking incident in a Ethereum network worth $120 million. So we have here various news and regulations about Bitcoin. They wanted to regulate Bitcoin. Other financial institutions are embracing Bitcoin and other cryptocurrencies as maybe the new asset class. So that's why they're offering it in a form of investment or loan, and so on and so forth. So that's about cryptocurrency. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.